then we're gonna go and look for some trades today. We'll be streaming almost an hour, probably a little bit shorter, and depending on what the market gives. Right now, we're just waiting for the tool to load in. So today is Tuesday. I was out of town on vacation until today, so this is my first day back on the charts. Monday was slightly consolidated, and then Tuesday, now we're getting these runs. It's election day, so it's expected essentially to see wild moves as of late. So we will see. Let's see. So let me go ahead and add another one, see if that. Okay, so there it goes. So we have our probability tool. So let me go ahead and let's see. Okay. Yo, what's going on, y'all? I see someone just slid in here. So the probability tool you can see has now been breached. So we're starting at the beginning of a setup. Also, you see we took this trade and ran that range. Originally wanted the stop to be here. Just wanted to give it a little breathing room because I took it at bond open, but we could leave it there now. And so this is giving us information now. So right here, when it ran this high, it has about a 40% chance to run the low. Now, target-wise, so what it's doing is measuring this range. So if we measured this range here, you can see the standard deviation. It's about a 38% chance to run. Now, if we want to add this one on there, we could just change the numbers. So we had the half extension, so we could do the 2 and the 3. So right here, you'll see it updated. So now let's get a little more data. The chance that we run up to this level generally is about 4% of the time over the most recent data. Now we can keep going further back to get more data, right? They're testing further and further back. Over 463 days back. So, and then we could even add. You can see how likely is it to keep continuing. So right here, this is about a 2% chance to get here. So the probabilities really start to drop off. In this area, this is where we could start looking for retracements. So I'm going to go ahead and close that trade just because it has run pretty decent. And we'll start looking for potential trade in here. We just got our break of structure, so good timing. Of course, we'd like to see it pull back. Like 50% of this range, maybe. Oh, there it goes, pushing. $9.12, so it could keep running bullish as well. We'll just see. Let's see. I know the hourly is generally the best time to get the most beneficial data. Let's see. Okay, so we've had none get to that level. And it just won't show it on the hour, but. So we're assuming that this level's not going to be hit because over the past 463 days, if it ran this range high, we never got to here. So we could also highlight this area we talked about, only has about a 2%. And so right here, we only had about an 11% chance to get here. So we could go ahead and start looking for a short here. It traded into this fair value gap. This is that order block. And we'll put the stop above the bodies right there at the rejection block. If it gets back up here, we'll close out of that trade. I would assume that they're going to try to give another short opportunity if they do stop this out. I don't think that they're going to run up into these levels. They might go up and tap this one, but if they tap that one, I'm not thinking that they're wanting to continue here based on the probability, right? Over the last 400 and something days, we have got here 0 times. And over the last 460 days, we've only got here about once. So, you know, but to be honest, it is already kind of an anomaly that we hit here, an 11% chance. So we do have to be mindful of that. I'm not just going to go in there and machine gun shorts, right? But I think we could safely take shorts as long as we have confirmation. So right here we have a break in structure, a gap. So there's at least some structural confirmation there that lets us know that we can get in a possible trade. US 30's running pretty heavy, seems like, as well. Gotta add the tool. This is one of my favorite setups right here. We talked about this range earlier. So the probability tool, like, it does all the work for you. So let me say that you were trading this setup here. I think, yeah, we got a couple of you in here. What's going on, guys? So I'm doing a replay real quick. If you want to pay attention, put your phone down or whatever you're doing. So right here, you see how it runs that low? It immediately tells you you have a 38% chance to run both. And that's only on the 1 minute, so you're not getting a ton of data. But essentially what you want to do is you would want to go long on that setup, and you would look for a solid area to put your stop. So if you're going to TP at least here, you know that's about a 38% chance, so that's not great. So I would want to go with like a 0.5 standard deviation stop. So it'd be halfway between 0.1 and point there. So we would go stop at 0.5. TP would be there. We'd be able to get a 1 to 3 or 1 to 1. And it would have been just a short trade. But that's come to be one of my favorite trade setups. Don't get freaked out by this because it's literally the exact same trade. But I like to take setups like this on the 15 second. So like right there, you can see that, you know, that is pretty aggressively running that low. But it gives us a better gauge of when it comes back, right? You could see it ran that low, and then it came all the way back to where? Right here, right? If I could replay that candle one more time, let me see. I want you to watch this next candle. Watch it. So we've got the range here. I want you to see it takes the range and also, so right here, look, that one gets close, but it forms that fair value gap. This next candle, it goes up, takes the range, comes back down. You want to try to get long in that fair value gap if you can. That is what you want to see for that setup. And then you can see here, gives you a little bounce and runs that high. So now the setup's over. But that was a really great setup this morning that you could have traded. You could see it right there. And it just kept running. So having some trouble getting my probability tool on there. Wow, look at that. Nice little tap. Dang, so we've got so we just barely ran that IPTA low. Look at that. Ran that 20-day low, which is highly significant. We're doing it in a bullish seasonal. I'm assuming this thing's going to go higher. We've got some gold trade stuff here, some GU here. Looks like we could have a good setup loading here on GU. Also, guys, if you have any questions, feel free to drop them in the chat. This is a new tool that we're using. So I know that it might seem kind of confusing because you haven't gone through the course. So if you have any questions, let me know. I'll be happy to help you out. Okay, so we breached that high. So the numbers I'm going to be paying attention to are 0.1, 0.2, 0.3, 0.4, and 0.5. This is that basically lower half. And then for the extensions, I want to know, same 1.1, 2, 3, 4, and 5. Now I'll show you one of our classic setups and what we look for. So we didn't get as much as of a retracement as we usually would like. So you can see right here these internal numbers. Let's see, let's go ahead and stream here. So you can see right here, this is the classic setup. So it breached the high and it's retraced. So generally we're looking for, and we need that 1 hour data because we need to get as many days as possible. We want to be somewhere between 40 and 60% generally. You know, obviously we could just use 70% for now. And then when we break that down, we want to start going to our lower time frame. So this here is not a great example for a trade setup. So we break the previous daily high. Now we need to retrace again into our 40 to 60% zone, which this one's roughly right now 40 to 70%. So it breaks the high. We're waiting for a retracement into the zone, but there's no structure that's built in there. You can see how fast it runs it. Right, so we need some structure, but generally what we'd like to see, for example, even like, the problem is you have to run the daily high first. So this area in here, you can see it runs that low and then breaks structure. That's good, right? We've got a breaker. Now I think we're trading back into that information. So there's relevant structure here that we could trade into, right? We could say, okay, this is our breaker. So we need to find whatever our breaker candle and trade that, right? Which I think you could end up catching a falling knife with that that theory. What I like to see is I like to see it trade into the zone and then give structure, and then that's where I take my setup. So for example, it's kind of piecing this one together, but we ran the zone here, but look, we'd have to get all the way back up here to break structure. And then now we're starting this mini trend really. Let me get the brush. Where's the brush at? So right here, you can see we create this low. I'm going to change this here. We create that low, and then we create this high. Now, we can't sustain the new market structure, right? We start creating this structure here inside of other structure. So we have lower high, lower low, lower high, lower low, lower high, lower low. Now, this here, we could start seeing breaks in structure and then possibly something to try to go long. Now, can we go long? That's the question, right? And this is where most traders mess up because they just say, yes, it looks long, so I think I could go long, right? This is where the probability tool changes everything. What's the percentage chance of us making it above this high? Well, again, let's go to our hourly so we can get the best data. But if we're looking at the range, we can see that we're only about 45% probability around this level. So less than 50-50. So it's more likely to stay inside of this range between today's high, today's current high, and today's current low. That's what the data is telling us, right? That because for example, when the highs run, it has about a 62% chance to get here, and it didn't. 48% chance to get here. So the chance of this happening, just on a statistical data standpoint, not factoring in the election and other markets and everything, just the raw data is letting us know, hey, we're more likely to consolidate than run this high. Doesn't mean that they're not going to run the high. No, right? But that's where the probability is pointing anyway. Okay, so we ended up taking a NASDAQ short in here at that fair value gap, but it did stop out. So like I said, we're going to wait. I don't necessarily think that they're going to try to run for this level. They can. If they do, I don't think they're going to run for this one. But like I said, I don't want to just go in there and take a slew of shorts. I'd like to wait for a little bit more structure and whatnot. We just ran that previous daily high on US 30. I would definitely consider taking that. Very, very small setup. But we actually got a true breaker structure in the sense of we got here, and this is a very small setup. The stop on this isn't going to be super significant. Just a couple points. So they just nicked that that previous daily high. Okay, so there it goes. So we tapped that previous daily high. Now the levels that we're starting to look at are here. So I'll just put them in green. And again, this one, numbers aren't going to be perfect because we're still on the 3. Let's at least go like a 5 minute. Obviously, these numbers are going to change a little bit. This is just a rough outline of them. So these are the target levels. So right now, what the data is communicating to us. So we've ran that previous daily high. Where is it more likely to go? Well, right now, we have about an 86% chance to retrace to this 0.1. So that's what I'm thinking is about to happen. I'm thinking that we're about to retrace to this level. After that, excuse me, I got a piece of hair in my mouth from my dog. Right here becomes a 74% chance. Now, what do you start seeing? Well, there's a 74% chance that we get to this. Okay, so we've hit it. There's a 74% chance we get to this level, but there's also a 74% chance that we extend higher. So that leaves us at a stalemate. It's about 50-50. Now, we're already in this trade short. So, of course, we would want to strategically side with the data that favors what we're already thinking. Okay, so NASDAQ ran the setup again. We're just taking one order. And I'm going to set it back here at the rejection block. And I mean, of course, I'd like to see this fair value gap get filled. But I do think that this could be a good area. Really, I'll be looking at this area first, seeing how it reacts in that fair value gap. But we got another, not a break and close of structure, but we've at least broken structure on a wick basis again, which isn't always super significant, but they are trying to move that way. I think ES is going to be bullish. I could be wrong, but I mean, I'd at least like to see him get to that gap. Gold is very skewed. I'm going to leave gold alone today. It ran that low, ran all the way to the high, which is, I know, lower probability, and now it's coming all the way back to the low again. So massive consolidations in gold going on today. They do look a bit bearish. And we've got a gap here. Also, the we could just have it do this. So on the higher time frame tool, we could just turn on the fair value gap, show fair value gap, and we can go to the daily one day right there. So now it's going to show us all the daily gaps. So you can see right here there was a daily fair value gap up here. Let's let it load in. Pretty cool tool. I like it. So you can see daily gaps in here. They pulled back up to it right here and then did again today. And I would assume if they go short that they're running for these. Also, it doesn't just do fair value gaps. It also does order blocks. So you could take the fair value gap off or leave it on. But if you need help finding the order blocks, you can essentially do the same thing. So it'll show you essentially the daily order blocks. Pretty helpful stuff. So we'll leave the fair value gaps on. And I want to see 4-hour fair value gaps. I'm worried about US 30 because ES is in that bullish seasonal. And we're at 50-50 odds now, essentially. Remember that 74 and 74. We do have to be careful with the selection too. So yeah, US 30 is fighting it. I'm just going to close that. They are pretty sensitive to the bullishness right now. Yeah, same thing with NASDAQ. I'd like to see him run. I don't want to see too much chop back and forth. This is just some basic technicals, but I think if we run above this high, we should not come back to this box. So I'm just going to put my stop there because it, in my opinion, as far as the technicals, if we run this, like I said, we should not see it come back to here. Yeah, so traditional setup, you'd like take the long in here, stop here. And then we would be targeting now the next level. Like I said, I don't think it's going to go here, but that would be your next logical target or how you'd build in that setup. So wanted to be short, but price just isn't really wanting to trade there right this second. And I'm more of a scalper, so yeah, you can see US 30's heading bullish. That's why I was worried about NASDAQ trying to get bullish, and I was bullish on S&P because there's that daily high right there, and then there's a big daily fair value gap. So I think that they're going to try to run into that. Plus, yesterday, Monday morning, we ran that 20-day low. All right, y'all. Didn't really get to catch too much this morning. We weren't here for the run. I ended up catching this NASDAQ long. Like I said, you could probably try to look for something in here now. I do think they are a bit overextended. Like I told you, my target's over here. You have my targets here. I want to see it get to that 74%, 60%, and then we'd start looking for a setup short. But appreciate you guys being on the call this morning. This will be it for this stream. And